Hi, this is Barry Brooksby with Optic Financial. It's clear that we are surrounded by financial uncertainty. Wall Street has failed and continues to fail. Stocks and mutual funds are volatile with no guarantees or collateral to back them up. National debt is out of control and continues to escalate year after year. The real estate bubble has popped, and who knows how long a full recovery will take. Qualified plans such as 401ks and IRAs no longer have the appeal that they used to. They have very high and hidden fees and are tied to the unstable stock market. The financial crisis and credit meltdown have made it painfully clear how little control we have over these investments. And well, the problems go on and on. So, what's the solution? There is a financial asset that has grown consistently through thick and thin. This financial asset has been used by the wealthy for decades and continues to be an anchor for many individuals, banks, large companies, and corporations. And now it's your turn. The solution is infinite banking and to become your own bank. With infinite banking, you get guaranteed growth, liquidity of your cash, tax-free use of your dollars, asset optimization, and total control of your money, just to name a few. This financial asset has had consistent growth through every stock market crash and recession this country has ever seen. Some of America's greatest fortunes have profited profoundly by using this financial asset. People like Walt Disney, J.C. Penney, Ray Kroc, founder of McDonald's, and many other notable U.S. businessmen. What do these great names have in common? What is this financial asset that is the foundation of infinite banking? It's cash value whole life insurance. Yes, cash value whole life insurance. It's one of the most controversial and misunderstood financial products out there. However, wealthy individuals have used permanent cash value whole life insurance as one of their most important financial tools for decades. And now it's your turn. The permanent cash value whole life insurance I'm talking about is not the typical whole life insurance that you hear Dave Ramsey or Susie Orman talk negatively about, but rather a supercharged whole life policy with distinct features that allow the buildup of cash value very early in the policy. Infinite banking and cash value whole life insurance has withstood the test of time. Whole life has had consistent growth even during the Great Depression and through stock market crashes over the last 100 years. So let's talk about the infinite banking concept and how it actually works to show you the consistent growth, the safety, the guarantees, the tax benefits, and today, the liquidity. I've drawn here a compound interest curve. The idea behind compound interest is to capitalize on this portion of the compound interest curve where your money is really starting to grow exponentially. Imagine if this straight line represented the dollar amount of zero. There are two common ways that most people are making major purchases, and I'm talking about a major purchase such as a car, a business, real estate, equipment, whatever that might be. The first common way is with cash. So let's assume that you want to purchase a car with cash. It would take you some time to build up the cash, and over time you'd get to the point where you had enough cash and you would make the car purchase and deplete the account. So there's our cash method. The second common way is to borrow the money or to go in debt and use credit. So if you bought this car taking a loan, it would look like this. You would take all the money in the form of a loan, then you would make payments back to the bank over time. You'd get to the point after 5 years or so where you would have the loan paid off and you're back to zero. So here is our credit method. The problem with using credit or borrowing the money from a bank is that there is an interest charge along the way. And what's interesting is whether you use cash to make a major purchase or you borrow the money from the bank, You finance everything you buy. Why would I say that you finance everything you buy even if you pay cash? It's because your cash, while you were saving it, was also earning interest. Also, it's lost opportunity cost. If there was an opportunity for you to make an investment in a business or whatever that might be, and you've just spent your cash on the car, that money is gone. We call that lost opportunity cost. And what's interesting is when someone uses cash to make a major purchase, they are usually pulling the cash from a savings account or an investment account. And every time that happens, they end up breaking this compound curve and they have to start over again. And that's happening time and time again every time someone uses cash to make a major purchase. So we're talking today about the third way, the alternative of infinite banking. So we're going to make an assumption that you have a cash value whole life insurance policy, and over time you've built it up so it has $100,000 of cash value inside the policy. And let's say that the car you're going to buy is a $25,000 car. So now, instead of paying cash outright or borrowing the money from a bank, you're now going to become your own banker, borrow the money from the life insurance company, use your cash value as collateral. And what's interesting is even though you have a loan against your cash value, the life insurance company allows for your full $100,000 to continue to grow so you never break the compound interest curve. Think about that. You have the ability to use your money and have your money growing and working for you at the same time. Your dollar is doing more than one thing at the same time. That's one benefit of cash value whole life insurance. I would invite you to meet with us here at Optic Financial so we can share more of this in detail with you and to show you what is possible with infinite banking and cash value whole life insurance in your financial portfolio. We look forward to meeting with you. Thank you.